Welcome everyone. मेरे साथ हैं रोशी मैम and very interesting times right now. As we have been discussing in the series, Union budget has just come out and at the same time markets are standing pretty much near the all-time highs. थोड़ा सा correction we have seen since then, but then things are pretty high up there already. So Roshi ma'am has very kindly agreed to talk to us and we'll try to get her outlook on this Union budget and on the markets right now. Ma'am, the mic is all yours, and we are here to listen and learn.
Sure, thank you. So maybe we'll start with the budget because that's most topical. I think the key message that we should take from the budget is that this government is firmly on the path of fiscal consolidation. Post the interim budget, we saw a large dividend payout from RBI to the central government. And the expectation was that a large part of that could actually be used for welfareism. However, I think the government has shown extreme fiscal prudence by spending only half of that large dividend amount from the RBI, and 50% of that has been used to reduce the fiscal deficit. And I think the message from the government is that they will be walking that path of fiscal consolidation. So FY26 is also likely to be a lower fiscal deficit than what is budgeted for FY25 itself, which is lower than what was budgeted during the interim budget. So I think that's really the key message. As far as capital markets are concerned, of course, we are all aware that capital gains tax was increased. They have also tried to simplify the entire capital gain structure. So there's a lot of tinkering around that. But I think the good thing is that at least going forward, we now have long-term capital gains on all asset classes at 12.5%. While some may grudge that the 20% with indexation on real estate would increase, the removal of that would increase their tax outgo. I think in general, we should look at it as simplification of the capital gains tax system. There could be some gainers, there could be some losers, but I think net the message is that the government is moving towards simplification of the entire capital gain structure. The capital gains, long-term capital gains, of course, increased from 10% to 12.5%. Besides that, I think, there are sectoral nuances, but broadly, I think these were perhaps the two key takeaways for me from the budget.
Absolutely, ma'am. Quite a few interesting points there, ma'am. Let me take them up bit by bit and understand their implications as well. Let's take up the last point first, which was the indexation benefit has been kind of done away with, and the capital long-term capital gain structure has also been changed, tweaked a little bit. What is the impact that you see on the stock markets and particularly the retailers who participate in the markets? And on them, do you see increased participation in the markets because of this, maybe, or vice versa, or no impact at all? What would be your view on this?
Frankly, I think in the longer term, it shouldn't matter because we are really looking at India from a more long-term perspective. I think the kind of drivers that one talks about, the demographic benefit, the move up the supply chains or greater share of global supply chains, the talent availability in the country. I think those are really long-term drivers, and those are what will drive the underlying markets. You pay taxes on the income you earn. So if there is still capital gains to be made, I think just a move from 10 to 12.5 is not going to derail the longer term story.
Right. Talking a little bit about sector-specific themes, let me ask them. There are quite a few themes in the market that have been popular. So, for instance, there is a segment like PSUs, defense, let's say power, which have rallied sharply in the recent past, and then people are still sitting at significant gains, and there's some people are still bullish. Well, some feel it's right now the market may have been overheated. What's your take on these sectors, ma'am?
I think, and this is what we've been saying for a while, that we have to move the narrative away from a very sector-specific approach and take a more stock-specific approach to our investments. There are, of course, opportunities in India across various sectors. I mean, who is to say that from a consumption perspective, there is no opportunity in India? Of course, there is the opportunity in infrastructure, manufacturing, power, defense, and all of the sectors that you talked about. And I think we should move the narrative to which are those companies that can take advantage of these opportunities from a long-term perspective and create shareholder wealth, therefore. And that's so I would say that there are opportunities in the power, defense, and so on and so forth space, but so are there opportunities in many other sectors of the economy. So that's where I would like to shift the narrative that is prevalent in the market. Yes, there are pockets which are overheated, where we feel that valuations are running ahead of the fundamentals. But I would think that this is more at a stock specific level, and or at least I would like to consider those at a stock specific level rather than take a very blanket approach and say this sector is overheated or that sector is not, and so on and so forth. I think we tend to oversimplify many of our decisions. Yes, simplification is good, but I don't think we should go the other extreme and oversimplify things. I think we need to look at each company on its own merit, whichever sector they be in.
Absolutely, ma'am. Beautifully put. I think one of the also major lacunas in the market is lack of awareness amongst the retailers how to identify the right companies while they get to know the themes. For instance, let's talking about this budget itself. People have been talking about agriculture as a theme, maybe fertilizers or textiles or skill empowerment in youth. But then, how to exactly translate these themes into investments is one thing where they may not have sufficient knowledge, of course. Let me take this opportunity to ask you, ma'am, can you give us a mantra maybe for retailers wherein once they feel that there is a scope in this, how do they go about identifying the pockets of opportunities company-wise, stock-specific opportunities? Or should it not be the top-down approach, should not be an approach at all, and we should always go bottom-up is something that we should be doing?
So first of all, I think we should realize that investing is as specialized and a field as any other field, be it medicine, law, engineering, and so on and so forth. And therefore, just because the market is accessible now, it doesn't mean that everybody can take a DIY approach. It is a specialized field, and therefore there are aspects which are best left to specialists. With that very broad remark, I would say that a bottom-up stock-specific approach is the only way to make money in the markets, because it's important to identify the right sector, but even more important is to identify companies which can take advantage of that sector. There are ample examples in history where sectors have done well, but there have been companies which have completely lost the plot. And therefore, I say that investing is a specialized field. One should realize, keep that at the back of their minds, and adopt a very company specific approach to investing.
Absolutely, ma'am. I think that is also the reason why mutual funds have such a big role to play in our this India's great growth story for retailers to participate. Can you tell us a little bit about? Okay, let me get to this first. How important are these events like budget, and should retailers should they actually be tracking the announcements and everything?
No, the broad framework is generally laid down by the government, not necessarily in the budget. What is the budget, right? The budget is actually an annual account of the government's revenues and expenditure. And therefore, we can take some pointers from the way money gets allocated to get a sense that broadly this is what the government is focusing on. But if you think about it, a lot of policy measures actually happen outside the budget. In fact, many of the large structural reforms that have happened outside of the budget. And therefore, I think, yes, it is important to look at the budget to get some pointers, but it cannot be the be all of macroeconomic policy.
Right. So my next question, ma'am, becomes what is like we discussed, like you said, retail. It's a very specialized field which should be left to the experts. So what homework does a retailer should be doing while taking care of their own investments?
I think the ground rules are pretty much what we have all read. It's just that it needs to be implemented and executed better. I think the first, of course, is to be clear about your own investment goals as well as the asset allocation plan for that. I think once you do that, a large part of the problem is to my mind, solved. And then you go about executing that. Given where markets are today, I think it's also important to be disciplined about the asset allocation plan and not get carried away just because equity markets in the last couple of years have delivered very good returns. I think this is genuinely the time to go back to basics, reevaluate your investment goals and the asset allocation, and be disciplined about it. Just because the last 2 years have been great doesn't mean that you increase the equity component in your asset allocation plan. So I think that's really the key that investors should be doing. The second is also reassess your own investment philosophy and risk tolerance thresholds, right? That becomes very important at this point in time where markets are sort of in a little bit of, I'd say, overvalued zone, at least from a near-term perspective. So I think it's important that investors rethink some of their investment philosophy as well as risk tolerance thresholds, and then put that in place by either reevaluating their own investment portfolios, or correcting their asset allocation framework. So I think this is what I would advise retail investors to do at this point in the market.
Absolutely, ma'am. Risk tolerance is something that I would also like to ask about. So while identifying your risks and your targets is also something that one should do with a SEBI registered investment advisor, and then accordingly set the routine in which they have to follow with discipline. Uh, what are some of the key risks, if you can explain for our viewers, that they have to keep in mind while getting into the markets, and why around these events, or if they're attached to these events, that they should be looking out for?
Risks are by nature, risks are something that is sort of unanticipated, because if it is anticipated, it is generally priced in. So we should always keep that something that we should always sort of keep at the back of our minds. From a broad, what risk could the market throw up perspective, I think you could broadly classify it as maybe global and domestic. From a global perspective, of course, geopolitics, inflationary pressures, maybe re-emergence of inflationary pressures rather, removal of liquidity or winding down of surplus liquidity globally. I think these are some of the things that, and of course, slowing down in growth. I think post-COVID, we've seen fairly good growth in the developed world, and we could see some of that starting to normalize. So I think those are some of the risks that we should be sort of aware of from a global perspective. From a domestic perspective, I think risks are perhaps more from a mismatch between fundamentals and valuations is something that I would call out perhaps as a risk that we need to be watchful of.
Absolutely, ma'am. And of course, before we conclude, ma'am, I would want to ask you one final piece of concluding advice, if you could leave for our listeners, sorry, our viewers, that would be amazing.
The only advice I'd give is to just stay disciplined. I think it's very easy to be tactical around investing and confuse speculation and investing. I think investing requires a lot of discipline, and perhaps now, as good as ever, is the time to be disciplined about the way we think about our own investments. So that's what I would perhaps leave as a concluding remark.
Thank you. Thank you so much, ma'am. And I hope you'll allow us to learn more from you in future.
Thank you. It's been a pleasure talking to you.
Thank you so much for your time, ma'am.
Investments in securities market are subject to market risks. Read all related documents carefully before investing.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.